Welcome to the Daily Brief, where we'll go over the highlights of the action in the market for Friday, November 4th, and then we'll see how the highlights look for Monday, November 7th. And we're pretty much mixed right now. We started off the week looking a lot more positive. Then on Wednesday, that's when the FOMC or the Fed press conference happened and took the market much lower. We did have an up day on Friday, but that's kind of mixed our technical picture up. And so you could make a case for either side at the current time. So what can we talk about for Friday? Right at the open, and the futures were up pretty strong during the night. They were up about 1%. Then the employment situation report came out. They immediately went down and then came right back up. And so at the open, we did have a higher open above R1 at 37.48. And then we even went above R2 at 37.75. Some selling came in, took us right back down. But then right after that selling ended, we recovered back above R2. As the day went on, selling took prices all the way down to the daily pivot at 37.23. And then just below that was the unchanged level. Then after that, this is when interest rates started to come back down. The dollar was seeing some weakness, and that gave some support to stocks, and they were able to rebound back to almost R2. We were up 1.36% on the day. Volume was above average, and our technicals, they're mixed right now. We had been shooting up pretty quick, and we got to an overbought situation, specifically in the short term. Well, after the big downward movement, that sure took care of the overbought situation. We actually became oversold with a couple of our indicators. Thursday was kind of, I'm not really sure what's happening. And then Friday, it could have gone either way, either up or down. The market just decided, after bouncing all over the place, to go ahead and end on a higher note. So technically, we're mixed right now because the markets are back to being uncertain when it comes to inflation and interest rates. They thought they had a good scenario to work with after that Wall Street Journal article came out. Well, that was pretty much thrown away after Wednesday's FOMC press conference. So now they're back to what's going to happen. Of course, then we have some other things too, like Russia, Ukraine. Earnings will be coming out this coming week. The big thing, probably on the news front anyway, will be the midterm election. That's happening this coming week. Please go out and vote. And then Iran and Saudi Arabia. We don't know. Is that going to escalate into something more serious? Is it going to calm down? I'm just trying to find information on that. So what are some comments? The employment situation report, and I'll go through it in a little more detail here in a second. It was taken as positive. They could have just as easily taken it as negative, but the futures were up before that. And as I said earlier, we sank down and then came right back up. There's also renewed speculation. Now, please be aware of the word speculation, that China will ultimately relax its zero COVID policy. That could help the Chinese economy. That could help the supply chain. That could help a lot of different companies that do business in China. The dollar ended up declining. That gave some support to stocks as well as interest rates. And then those Chinese stocks that trade in the U.S. as well as U.S. companies that do business in China, they had a pretty good day because of this speculation about their COVID policy. The VIX continues to be oversold. Now, it's been going down as stocks were going up, but the interesting thing is when stocks were going down, the VIX was not going up. And so it's not worn off this oversold condition right now. And that's more negative than positive. We still have a number of the yield curves that remain inverted. Sentiment is neutral to slightly positive right now. It ticked back up a little bit with the up day. And then I'll talk about the employment situation report here in just a second. And we don't have a trend right now. The ADX has dropped below 20. The red line's on top. So we would default to the negative trend. The bias, I'm keeping it as mixed right now, even though we had the up day. It's just been really crazy. The market really got blindsided by Chairperson Powell's comments on Wednesday. And I'm keeping our momentum at mixed. And that kind of matches up with what we're seeing with our charts as well. So here's the employment situation report. The non-farm payrolls came in at 261,000. That was greater than expected. The market could have tanked based on that. Last time we got this report, it was at 315,000. So it is coming down. Then we had non-farm private payrolls. They were also higher than expected at 233,000. They expected 225,000. That's also coming down from the 319,000 that we got last month. The average hourly earnings, this could have just really tanked the market. It came in at 0.4%. They expected it to come in at 0.3%, which is what we saw last time. And the market just decided, we're not going to go lower based on that. The unemployment rate was higher than expected at 3.7%, where last time it was at 3.5%. Well, they expected it to go up to 3.6%. And then the average work week stayed about the same. So no matter what the market wanted to do on Friday, it could have justified it using this report as determining if prices went higher or lower. That's probably why they did both for a lot of the day. Then there's no update with the World Series indicator. There was no game on Friday. Currently, Houston leads Philadelphia 3-2. And you might, by the time you watch this, the World Series might even be over. All right, so what's our outlook then for Monday? The technicals, I'm calling them mixed right now. I know you want more of a black and white answer, but we're just seeing a lot of different signals right now. We only have consumer credit coming out on Monday. The whole list of geopolitical events, probably the midterm election, that'll be what's mostly in the news. Those folks that are concerned about the World Series. And then if we were to get any Fed speak, and then, of course, something can always come flying in to dominate things, but this is just how it looks as of right now. We can't really go with the down scenario because the ADX is below 20. We can't go with the up scenario right now, and I should have made this more gold color for number 3. Since we are below 20, we're more or less in a trendless environment. But if we were to default to anything, it would be to the negative side because the red line is on top. So our conclusion, the S&P is mixed right now. Short-term mixed, intermediate term, negative to mixed, and long-term, we're still negative overall. So thank you. Please feel free to check out the full-length video. I will be preparing and posting the weekly video as well as the intermarket analysis video.